welcome everybody to Echo Talks, and today we are gonna review a corporate income tax case. The company, named MIKI SL, works in the field of transportation and logistics and wants to file the corporate income tax for 2019. MIKI SL provided us with the following information. The profit before taxes was 130,000 euros. One of their clients is falling behind with payment for more than 6 months. A provision of 5,000 euros to cover the possible insolvency was booked as of December 31st, 2019. The staff in charge of the supply of goods were fined, and the amount charged to the company due to several speed tickets was 1,975 euros. The total income for 2019 includes 28,000 euros related to dividends from the subsidiary, which is wholly owned by MIKI SL since 2017. The balance sheet of MIKI SL shows electronic equipment with a book value of 100,000 euros. During 2019, the rent depreciation was 10,000 euros. However, the maximum depreciation rate applicable to this category of assets in terms of taxation is 20%. In 2018, a provision of 54,000 euros regarding performance bonuses was accrued. In 2019, payment of the mentioned amount was made to the employees. By the end of 2019, MIKI SL issued an invoice whose amount was 32,000 euros. The 50% of the receivable amount was paid when the service was provided in 2019. The rest will be paid in 2021. Over the past years, MIKI SL have been having losses. Consequently, the company is entitled to apply tax credit carryforwards that amount to 21,325 euros. The applicable tax rate is 25%. No deductions are to be applied. Finally, MIKI SL paid 3,525 euros as installments related to the corporate income tax for 2019. Something very important regarding the corporate income tax is that the calculus is pretty related to the accounting and especially the profit before taxes. This means having the financial statements in good conditions is essential if we want to determine the corporate income tax correctly. Otherwise, it is likely to make mistakes. In addition to that, note that misleading bookkeeping is fine with a fine that may reach 150 euros. However, when the infraction is intended, fines may substantially increase. According to our case, the profit before taxes for 2019 was 130,000 euros. Not always the profit before taxes matches the corporate income tax basis. Tax rules are fairly similar to accounting rules. Nevertheless, there might be differences. When there are differences between accounting and taxation, we have to make adjustments in order to determine the tax basis. These adjustments can be positive when the tax basis is increased or negative when the tax basis is decreased. Likewise, these adjustments we may have to make can be permanent or temporary as they revert over time and generate deferred tax assets or liabilities. Let's get started with the analysis of the case. We realize that one of the clients is falling behind with payment for more than 6 months, and a provision of 5,000 euros was booked as of December 31st, 2019, to cover the possible insolvency. Depending on the case, clients' provisions can be deductible or not. Clients' provisions are only deductible if one of the following situations occur. The debtor is falling behind payment for more than 6 months. The debtor is declared in bankruptcy. The debtor is accused of asset stripping. the debtor has been sued in order to claim the payment. Our situation is the first one. Then, the provision is not only deductible in terms of accounting, but also tax-wise. No adjustments are to be made in this case. Let's see if we have to make any adjustments for the rest of transactions the company carried out in 2019. The staff in charge of the supply of goods were fined, and the amount charged to the company due to several speed tickets was €1,975. Under no circumstances will fines be tax deductible. Therefore, we have to adjust the profit before taxes and increase the tax basis permanently. The total income for 2019 includes €28,000 related to dividends from the subsidiary, which is wholly owned by MIKI as well since 2017. In order to avoid double taxation, because the dividends could be taxed in the subsidiary and the parent company level, provided the two requirements are met, this may be tax exempt. The two requirements we have to meet are the following ones. The participation share in the company that distributes dividends is over 5% or the purchase value is higher than €20 million, and the participation in the company is uninterruptedly held for more than 1 year. As MIKI S.A. participation share is 100%, and it has been this way since 2017, the dividends are tax exempt and a permanent and negative adjustment is to be made. And what about depreciation? Well, the balance sheet of MIKI S.A. shows electronic equipment with a book value of €100,000. During 2019, the run depreciation was €10,000. However, the maximum depreciation rate applicable to this category of assets in terms of taxation is 20%. First of all, note that the Corporate Income Tax Act contains a chart with the maximum depreciation rates and the maximum useful life we can apply to assets. When depreciation rates are different between accounting and taxation, there will be temporary adjustments. In this case at hand, the accounting depreciation rate is 10%, while the depreciation rate in terms of taxation is 20%. We apply the latter because it is more profitable for the company. We will pay less taxes in 2019, but this will make us make a temporary negative adjustment. Also, we have to book a deferred tax liability since as of 2024, we will have to pay more taxes because the electronic equipment will be already fully depreciated tax-wise. In 2018, a provision of €54,000 regarding performance bonuses was accrued. In 2019, payment of the mentioned amount was made to the employees. The general rule states that provisions are only deductible when payments are effectively made. The profit and loss for 2019 shows expenses related to the accrued provision. However, these provision-related expenses will only be deductible when payments are made, namely in 2019. In 2018, we had to make a temporary and positive adjustment and create a deferred tax asset because in 2019 we will pay less taxes. In 2019, the adjustment is reverted and the tax basis is reduced by applying the deferred tax asset. This one is the last adjustment we have to make. By the end of 2019, MIKI S.A. issued an invoice whose amount was €32,000. 50% of the receivable amount was paid when the service was provided in 2019. The remaining amount will be paid in 2021. For operations where payment is deferred or paid in installments that last more than 1 year, the income is obtained proportionally as the corresponding payments are made, unless the taxpayer opts to tax in accordance with the accrual criteria. We will have to make a temporary and negative adjustment and book a deferred tax liability in 2019. Since now we are paying taxes on €16,000, not 32,000 euros, due to the application of the cash basis instead of the accrued basis. We will pay taxes on the other 16,000 euros in 2021, though. Let's check the self-assessment diagram. We started with the profit before taxes, and now I'm showing the adjustments to be made with the sign and the resulting tax basis before reductions, which is 43,975 euros. After applying the adjustments, there are certain reductions we may have to apply. One of the most well-known is the tax credit carryforwards. In the Spanish corporate income tax, we can carry forward losses from past years to offset the tax basis. Keep in mind that this reduction specifically is limited up to 70% of the tax basis prior to reductions. Although, in any event, tax credit carryforwards for an amount up to 1 million euros may be offset. Alright, now we have to add the tax credit carryforwards reduction to our self-assessment diagram, and we finally obtain the corporate income tax basis that amounts to 22,650 euros. Next, we have to multiply the tax basis by the corresponding tax rate. The general tax rate is 25%, but some taxpayers may apply a different tax rate according to the characteristics. For this company, the applicable tax rate is the general one, 25%. Once we multiply the tax basis by 25%, we obtain the gross quote. We may have to detract deductions from the gross quote to obtain the net quote, but no deductions are to be applied in this case. For this reason, the gross quote is the same as the net quote, because there are no deductions to detract. The net quote, which is the same as the gross quote, as we mentioned, is 5,662.50 euros. Finally, MIKI SL paid 3,525 euros as installments related to the corporate income tax for 2019. Corporate income tax installments are payments made in advance during the tax year. The result is the difference between what we paid in the course of the tax year and what we actually had to pay now. To obtain the result, we have to deduct the installments from the net quote. Let's add this final step, and the installments made are 3,525 euros. To conclude, the resultant payable amount is 2,137.50 euros. To wrap up, you can see in this slide how the corporate income tax for 2019 should be booked. If you happen to have any doubts regarding the self-assessment or the way this is booked, please let me know in the comments, and I will try to answer all your questions you may have. Thanks for watching.